analysis without focusing on or without giving focus to all the values. Okay, so আমরা সব ভ্যালুকে ফোকাস করব না, we will only focus on the trend. Okay, so this is all about our analysis, the time series. Now moving on to the cross sectional analysis. Cross sectional analysis is where we compare your performance against another company. So let's say your current ratio is 1.13 but other company's current ratio is 1.4. So are you doing good or bad compared to the other company?
Bets.
You are doing bad, as in your liquidity position is weak compared to the other company's liquidity position with respect to the current ratio. Because the higher the value is better, but your quick ratio, sorry, current ratio is 1.13, whereas other firm's current ratio is 1.4. So you are doing bad compared to the other firm, or your financial position or the short-term solvency position is weak compared to the other company's short-term solvency position. Okay, so এইভাবে করে আমরা cross sectional analysis লিখবো. Okay, so we are done with four things, that is define, calculate, interpret, and analysis. Okay, the last thing is recommendation, but recommendation usually is written, not usually but always is written at last after covering all the ratios of the category. So after all the ratio of the category is covered, then we write an overall recommendation to improve certain areas where the company is having problem. Okay, so এখানে আমাদের এই ক্যাটাগরিতে পাঁচটা রেশিও আছে, সো পাঁচটা রেশিও কভার করার পরে then we can write an overall recommendation যে what needs to be done in order to improve the company's liquidity position. Okay, so I will come back to the recommendation later. Now moving on to the next ratio, that is the quick ratio. Quick ratio is calculated similar way to the current ratio. There is only one difference, and that is for calculating the quick ratio we deduct inventory. Okay, so quick ratio, the purpose is to measure the firm's ability to pay the current maturing obligations with the company's most liquid assets. The ability to pay current maturing obligations with the most liquid assets is measured with quick ratio. Okay, one of the asset is least liquid, and that is inventory. So for calculating the quick ratio, the inventory is deducted from current asset in order to get the most liquid assets, and then it is divided by current liability. Okay, now can anyone tell me why inventory is the least liquid asset? We
It
discussed it.
loses significant value over time.
Mhm. That is one reason. And what else is another reason why inventory is considered least liquid?
It might not sell, it might go bad.
ওইটাই তো significant loss in value.
It is not easily converted into cash.
Yeah,
Takes
we
Right.
cannot force the customer to buy it.
Exactly. We cannot force customers to buy it. Or if it is in the production phase, let's say you already have processed the raw material, but can you sell half done product? Or can you sell partially completed products
No,
if you
sir.
need cash? Let's say you need cash today, but you don't have cash, you have partially completed products. Can you sell them to, let's say, meet your cash shortage?
No, sir.
No. Right. So inventory takes longer time to be converted into cash. It is getting delayed. It is not easy to convert. It is delayed as well as it is difficult to convert into cash. And it loses significant value over time due to the nature. Okay, due to the nature of the inventory. For example, food items, fashion products, technological products. Over time, the value may decline. Okay. So due to these reasons, inventory is considered least liquid asset, and least liquid asset is deducted from current asset to get the most liquid assets. And then the most liquid asset is divided by current liability in order to calculate the quick ratio.
Sir,
Yes, sir.
sir, can you just repeat the purpose of the quick ratio just once?
Yeah, sure. Quick ratio is measuring the firm's ability of paying current maturing obligation with the most liquid assets.
Thank you, sir.
Okay, welcome. So here the 301 is the inventory that is deducted from the current asset 2256, That will give you the liquid asset, most liquid asset, and then divided by current liability, which is 1995. Okay. And it will give you the quick ratio 0.98 times. So the quick ratio 0.98 times implies, now I'm talking about the interpretation. So the quick ratio 0.98 times implies to pay each $1 of current liability, to pay each $1 of current liability, the firm has 98 cents or $0.98 of liquid assets. Okay. To pay each $1 of current liability, the firm has 98 cents of liquid assets. Or you may also write in this way, to pay each $1 of current liability, the firm has 98 cents of current asset excluding inventory. Okay. To pay each $1 of current liability, the firm has 98 cents of current asset excluding inventory. So inventory বাদ দিয়ে 98 cents current asset আছে to pay each $1 of current liability. Okay.
Excluding inventory.
Yes, excluding inventory because you have deducted inventory from current asset. Now, is it lower the better or higher the better?
Higher the better.
Just like the current ratio, quick ratio is also higher the better. Thank you very much. So quick ratio is also higher because higher the better because most liquid asset, the more you have, the less chance that you miss out the current liability payment whenever they are due. Okay. But less the quick ratio means you have less money left to pay off your current liability whenever they are due. Okay. So the higher the quick ratio is better. Now, time series, cross-sectional, all these analyses will be similar to the current ratio. For all these ratios, analyses are same. So if it is higher the better, you need to check whether it is increasing over the time or decreasing over the time. If you see it is increasing over the time, then the company's solvency position is strong. But if it is declining over the time, then the company's solvency position is weak. So this is how you're going to do the time series analysis. Again, if you see fluctuations, ups and downs, find out the highest year, lowest year, and what happens in the most recent year. Okay. For the cross-sectional analysis, again, we're going to compare quick ratio of this company against quick ratio of another company. So if you see your quick ratio is higher, 0.98, compared to the other company's quick ratio, let's say 0.8, that means your solvency position is strong compared to the other company. But if you see your quick ratio is lower, 0.98, whereas other company's quick ratio is higher, 1.15, let's say, that means your solvency position is weak compared to the other company's solvency position with respect to the quick ratio. Okay, so analysis আলাদা না, সব analysis same. প্রত্যেকটা analysis is same. Time series and cross sectional both are same. বাড়লে কি বলবো, কমলে কি বলবো, fluctuation হলে কি বলবো, that we all need to know. And that is the same thing that we're going to mention for each ratio, for analysis of the each ratio. Okay. So we're done with the quick ratio. The next one is called the cash ratio. The cash ratio measures the company's cash holding position for paying off the current liability. Okay. How much cash the company holds to pay off the current liability is measured with cash ratio. So cash ratio measures how much cash the company holds to pay off current liabilities. Okay. Cash is the most liquid asset. It is the readily available money. So it is the most liquid asset. So if you divide cash by current liability, it will give you the cash ratio. Okay. So cash comes from balance sheet 696 and that will be divided by the current liability 1995. That will give you the cash ratio 0.35 times. Coming to the interpretation. The cash ratio 0.35 times implies to pay each $1 of current liability, the company holds 35 cents of cash. For paying each $1 of current liability, the company holds 35 cents of cash. Okay. সো প্রত্যেক $1 কারেন্ট লায়াবিলিটি পে করার জন্য কোম্পানির 35 cents ক্যাশ আছে। That is what it means by cash ratio. This as well, the higher is better. So if you see the cash ratio is increasing over the time, the company is doing good. But if you see the cash ratio is declining over the time, that means the company is doing bad. Over the years, if you see fluctuation, again, just like the other two, highest year, lowest year mention করে, recent past performance consider করে, you need to write whether the company is doing good or bad in terms of the cash ratio. Okay. I'm keeping all the recommendation for later. Okay, recommendation আমরা পরে লিখবো. We're going to write it after covering all these five ratios. So we're done with the cash ratio. Next one is called the net working capital to total asset ratio. Net working capital to total asset ratio measures how much the company have invested in working capital compared to the total asset investment. So this measures the firm's investment in working capital out of or compared to the total asset investment. So total asset এর তুলনায় কতটুকু working capital invest করছে the company, that is measured with net working capital to total asset. Okay. So we know net working capital is the current asset investment minus current liability. Current asset minus current liability gives us working capital. And then it will be divided by the total asset in order to calculate the net working capital to total asset ratio. Okay. So 2256 is the current asset, 1995 is the current liability. So if we deduct 1995 from 2256, that will give us the working capital. And then divided by the total asset, that is 5394. So this will give you the net working capital to total asset ratio, and that is 0.05. Okay. So just like the other ratios, this ratio, net working capital to total asset, can also be measured in times, can also be measured in currency. Okay. So here it is 0.05 times or $0.05. Okay. Coming to the interpretation. Net working capital to total asset 0.05 implies for each $1 of asset investment, the company invested 5 cents in working capital. For every $1 of asset investment, the firm invested 5 cents in working capital. So for every $1 of asset invested, 5 cent is invested for or invested in working capital. Okay. So প্রতি $1 total asset investment 5 পয়সা or 5 cent is invested in working capital. Okay. Now this is also the higher the better, because the more the working capital you have, less dependent you are on selling fixed asset to pay off your current liability. If your working capital is low and if you need to pay cash for the current liability payments, you may have to sell fixed asset. But is selling fixed asset feasible for your solvency to maintain? Fixed asset বিক্রি করে solvency maintain করা, is it feasible?
No, sir.
No.
No. Because if you sell fixed asset, you are reducing your production capacity, isn't it? Like machine বিক্রি করে আপনি যদি accounts payable pay করেন বা salary payable pay করেন, is it going to be worth for your future operation?
No, sir.
No, right? কারণ if you sell fixed asset, that will cost you your future operation. আপনার future operation এর জন্য এটা costly হয়ে যাবে, right? And fixed asset sales is not even easy. Okay. So if your working capital investment is high compared to your total asset investment, that means you can pay off your current liability whenever they are due. You don't need to depend on selling fixed asset. But if your net working capital to total asset is low, that means you may depend on selling fixed asset to pay off your current liability whenever they are due. So therefore, having higher working capital to total asset is good. Okay, whereas lower working capital to total asset is bad. So keeping this in mind, if you see it is increasing over the time, that means the company's solvency position is getting strong if it is increasing. But if it is decreasing, that means the company's solvency position is getting weak. Okay. With respect to the net working capital to total asset. The last of this category is called the interval measure. The interval measure ratio is a very useful ratio. This particular ratio measures how many days the company can operate without further investment in current assets. How many days the company can operate without further current asset investment is measured with interval measure. Okay. So আপনি যদি নতুন কারেন্ট অ্যাসেটে ইনভেস্টমেন্ট না করেন, if you are not investing in new current asset investment or further investment increase in current asset, তাহলে কতদিন you can operate with your daily activities. আপনি কতদিন অপারেশনটা চালাতে পারবেন, ডেইলি অপারেশনটা কতদিন চালাতে পারবেন, that you can measure using interval measure. Okay. So this is always measured in number of days. How many days you can operate without further current asset investment. So basically এখন যে current assetটা আছে, it will be rolled over, and if you not investing more in current asset, how many days you can operate, that is measured with interval measure. Okay. To calculate the interval measure, we divide current assets by average daily operational cost. Okay. Current asset is divided by average daily operating cost or operational cost. Current asset comes from balance sheet and that will be divided by average daily operation cost. Since it is daily operation cost, what we need to do is we have to get the total expenses from the income statement and that will be divided by the number of days in the accounting period. Okay. So cost here is 2006 plus 1740 and that is divided by 365. Why it is 365? Anyone?
Per day count করে তো।
Party.
Year. A year makes up with 365 days, right? So if you add up the cost and divide it by 365 days, that would give you the daily operating cost. Okay. But if the reporting is for quarter, if the reporting is for a quarterly period, then the denominator would be 90 because 3 months makes a quarter. If the reporting period is a month, then the denominator would be 30. Okay. That is the total cost would be divided by not 365 but by number of days in the accounting period. Okay. Since here the company reported for a year, that's why the operating cost is divided by number of days in the accounting period. Okay. Now, what makes up the operating cost? As in, what are the items of the operating cost? কি কি cost operating cost হিসেবে আমরা count করি?
Electricity bill,
Okay. What else?
Employee salaries,
Employee salaries, electricity bill, right? Anything else?
rent,
Rent. Okay. Anything else?
advertisement,
Advertisement. Very good. Advertisement, selling and selling costs, as in sales commission. All these costs are operating costs. But what about production cost? Is it an operating cost? Cost of production.
no sir,
It is. It is an operating cost, though it is reported separately in the income statement, but it is part of your operation. How would you manage your operation without incurring the production cost? Can you run your operation without cost of goods sold? Can you run your operation without paying the, let's say, material cost, labor cost associated with production? Is it possible to operate without incurring the material cost or labor cost?
No
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 sir।
sir.
sir,
No. So we show it separately from the operating expense, the cost of goods sold, but cost of goods sold is also an operational cost. Okay, it is an operational cost, not directly associated with the operation, but is a part of the operational cost. Okay. So here the cost will include only the cash cost that is paid in cash, not the non-cash expense. Like non-cash expense is depreciation. but depreciation will not be included here because depreciation তো আমরা আর pay করি না কাউকে, right? We do not pay depreciation anyone. It's an artificial way to allocate the cost of the asset over its useful life. So since depreciation is not paid in cash, that's why depreciation will not be added here. So here we will count the cost of goods sold and other operational expenses. So let us go back to the income statement to see the cost that we are going to count as operational cost. So cost of goods sold is 2006. Expenses could be the operating expenses 1740. Depreciation is 116. But depreciation we are not going to take. Interest expense, is it a operating cost?
No, sir, financial cost.
It's a financial cost. Very good. So it is not an operating cost. Tax will not be an operating cost. It's an let's say payment made to the government based on the income, right? So it is not part of operation. So operation করতে আপনার tax pay করতে হয় না, tax pay করতে হয় income করলে, right? So it's an income tax, not an operational tax. So therefore tax is also not an operational cost. So the operational costs here are going to be the cost of goods sold and the operating expenses, okay, but excluding depreciation. We are not going to include the depreciation. So 2006 plus 1740 will give you the operating cost divided by 365. That will give you the daily operating cost. And lastly, the current asset is divided by the daily operating cost in order to get the interval measure. Okay. So interval measure in this case is 219.8 days. So let us now interpret. So interval measure 219.8 days implies the firm can operate its daily activities. The firm can operate its daily activities for 219.8 days without further current asset investment. Okay. The firm can operate daily activities for 219.8 days without further current asset investment. So আপনি যদি নতুন করে কারেন্ট অ্যাসেটে ইনভেস্টমেন্ট না বাড়ান, if you are not increasing investment in current asset, you can operate for 219.8 days. Okay. Now in terms of solvency, is it higher the better or lower the better?
Sure, higher the better.
Higher.
Higher the better. Because the longer you can operate, less depending you are on investing more in current assets. So you don't need to invest in more current asset, but you can operate for longer period. So therefore higher is better. So if you see the interval measure is increasing, that means you can operate your activities without further investment in current asset for longer period, which is good. But if you see it is declining, that means you cannot operate for longer period. You may have to depend on more investment in current asset in that case, which is bad. Okay. Our fluctuation হলে আগের মতোই highest, lowest and recent year performance you are going to consider. All right. Our cross sectional বেলায়ও you're going to compare your performance with another company's interval measure. So let's say your interval measure is 219 days, another company's interval measure is 150 days. That means what? Your company is doing good compared to the other company because your interval measure is higher than the other company's interval measure. Okay. So this is how you're going to do the cross-sectional analysis. All right. So you're done with all these 5 ratios under the short-term solvency or liquidity ratios. Now we are going to move on to write the last thing, that is the recommendation. Okay. Remember, we covered 4 things for each ratio. We have defined, we calculated, we interpreted, and also we analyzed, but we did not write any recommendation so far. এখন পর্যন্ত আমরা কোনো recommendation লিখি নাই. Okay. Now is the time we are going to write the recommendation. Recommendation needs to be written only for those ratios where you see problem, where you see there is some sort of issues, okay, negative issues, negativity. So যখনই আমাদের কোনো problem দেখবো কোনো রেশিওতে, only then we are going to write recommendation to improve that ratio in future. Okay. And recommendation is depending on whether the company is doing bad compared to its past as well as compared to the other company. That means আপনাকে টাইম সিরিজ এবং ক্রস সেকশনাল দুইটাই কনসিডার করতে হবে, নট অনলি ওয়ান। সো ক্রস সেকশনালে আপনি যদি দেখেন ইউ আর ডুইং ব্যাড, বাট টাইম সিরিজে ইউ আর ডুইং গুড, স্টিল ইউ হ্যাভ টু রাইট রেকমেন্ডেশন। ওয়াই? বিকজ in the cross sectional analysis you have found that your ratio is doing bad, okay? Or other way around, that is, let's say cross sectional e bhalo, but you see time series you are doing bad, as in you are having decline in the ratio in the time series analysis. Again you have to write recommendation, কারণ আপনার নিজের পারফরম্যান্স নিজের সাথে তো খারাপ হচ্ছে, okay? So no matter you are doing bad in time series or cross sectional or both, you have to write recommendation, okay? So এখানে আপনার কোনটা applicable, which recommendation is applicable for you, that depends on your company's performance, okay? So আপনার যে কোম্পানির ডেটা দেওয়া আছে বা যেই ম্যাথ আপনি করবেন, আহ, ওই ম্যাথের ওই ডেটার উপর ডিপেন্ড করে you have to write the recommendation. But I will tell you recommendation for each of these 5 ratios. But remember, not all these recommendations are needed for you. You need to decide which recommendation is needed for you, okay? So I'll tell you what are the recommendation for improving all these 5 ratios. So let's start with current ratio. To improve the current ratio, the company must increase investment in current asset. Current asset needs to increase. Investment in current asset should increase. And the investment in current asset must come from long-term capital sources. Okay. Investment in current asset must come from long-term sources of capital or long-term capital sources. Like if you invest more in current asset, like inventory, আপনি purchase করলেন inventory, you purchase 1 lakh taka worth of inventory and you need 1 lakh taka, but you don't have 1 lakh. So in that case, you may purchase on credit. So if you purchase on credit, what will happen? The inventory, the asset is going up by 1 lakh, but at the same time, the accounts payable, which is a current liability, is also increasing by 1 lakh. In that case, will you be able to improve your current ratio?
No.
No, because we know current ratio, the formula is current asset divided by current liability. So if the current asset is increasing by 1 lakh and current liability is also increasing by 1 lakh, then there will be no change in the current ratio. So you will not be able to improve it, right? So that's the reason why the investment in current asset must come from long-term capital sources. Long-term capital sources are debt and equity. You have to either borrow long-term or you may issue share in order to invest more in current asset. Okay. So this would be the recommendation for improving the current ratio, that is increase the current asset, and the investment must be coming from long-term capital sources. Okay. Now for quick ratio, we don't need a separate recommendation if the current ratio and quick ratio are close enough. Like here, you can see the current ratio is 1.13 and quick ratio is 0.98. They're not that different. Okay. So if the current ratio and quick ratio are close to each other, then you don't need a separate recommendation. If you invest more in current asset by, let's say, using long-term source of capital, current ratio, quick ratio, both will increase. Current ratio, quick ratio, both will increase if you invest more in current asset by raising capital from the long-term sources. But there is a but, and that is if the current ratio and quick ratio has large difference, major gap, in that case you need a separate recommendation for the quick ratio, and that recommendation would be selling or disposing of inventory. Okay. So if the difference in current ratio and quick ratio is too much, let's say current ratio is 1.13 but quick ratio is 0.7. Current ratio is 1.13 but quick ratio is 0.7. Gap is too much. So when the gap is too much, it simply means you have over investment in inventory or you are holding more inventory in current asset than the other current asset. অন্যান্য current asset থেকে আপনার inventory investmentটা বেশি. That's why your quick ratio is too low compared to the current ratio. In that case, you need to write a separate recommendation for the quick ratio, and that is sell or dispose of inventory. Okay. বিক্রি করতে হবে অথবা write off করতে হবে. Sometimes inventories are unsellable. Some inventory gets obsolete, যেটা আপনি আর কোনোদিনই বিক্রি করতে পারবেন না। So ওই inventory গুলোকে you have to write off. That is called disposal. Okay. So either you sell or dispose of inventory.
স্যার এটা লস হবে না স্যার?
হতে পারে লস, বাট আপনার কিছুই করার